Okay, what's going on, guys? How you guys doing? Please let me know if you can hear me and see the screen. Is there anybody out there? Okay. Hey John, how you doing? Okay, perfect. Thanks. So guys, let's get this party started. Okay, I'm Michael Katz. I'll be your host for today. We've been trading for the last 15 years. Indices, mostly stocks, but also futures like indices and some commodities. And today we're going to basically focus on the indices, but of course if you have any questions, feel free to drop them in the box. And we will analyze the charts for the S&P, the DAX, the Dow and the NASDAQ, understanding basically the opportunity for the next day or so. We are 30 minutes away from the opening bell in the US market, so plenty to do even for right now or for the next hour, 2-3 hours. So let's see. I'll be using the one of the platforms that I'm using. It's I think called Swim. I'm just using it to analyze the chart, so I'll show it to you, and then we will go through on the trades that I made today on the DAX, the DAX 30. We will talk about that as well, and maybe if we will have a chance to find a specific setup to get into a trade, we'll do that as well. Hopefully you already joined our instant funding program where we have indices that you can trade. So let's see. Okay, so first of all, when I'm analyzing the charts of the any kind of chart, but obviously when we're talking about the American market, then we need to go to the NASDAQ and the S&P. Those are the major indices that rule the world, basically. So the first thing we want to do is go to the 4H, or you can go even more than that, but usually since we're doing like day trading or at least a short-term trading, you don't really need to go above the 4H. Maybe a daily, I usually stay there, just stay up to the 4H. And things that I want to watch is obviously major demand area or supply, support, resistance, understand the chart a little bit better, understand where we came from. One of the probably the main things that people get wrong about technical analysis is that they watching a specific level or watching a specific pattern like a bull flag pattern, but at the end they don't really check where we coming from. They only check, okay, they see let's say a bull flag and they saying a bull flag should continue higher, but they didn't check what happened before that, and if they would have done that, they will see a whole different story. So first of all, as you can see, we're dropping from, I'm looking at the ES, the S&P. Let me get a cleaner chart. Okay, so we're looking at the S&P 500 dropping from the 4,800 all the way to the last low of the 3639. So that's a nice push to the downside of 1,200 points. And at the moment we are still obviously very bearish. but at the moment we're trying to consolidate just a little bit and maybe push to the upside. One of the things that I would like to use when I'm analyzing is using also the MACD, the MACD that you can see below the volume here. And what I'm looking for is divergence from between the MACD and the chart. So this is one of the things that I've been using for since day one, basically. And as you can see, it's pretty easy, at least here, to see it, that we have a nice deviation. Let me oops, just a sec. And the deviation basically telling us that the price of the S&P is dropping and creating new lows, while the MACD creating new highs. Basically the momentum is shifting. However, and this is something that maybe in time... Oh, you don't see my screen, guys? Okay. Hold on, just a sec. Do you see the MT5 now? All right, okay. Yeah, I got it. Okay. Now you should see it. Yeah, okay, now you should see it. Let me know that you can see the chart. Ooh. Thanks, John. Okay. All right, now. So let me repeat a little bit of what I just mentioned. So we're looking at the S&P, great. Sorry about that. We're looking at the S&P 500. I'm looking at the 4H chart, and what I mentioned is that first you need to take a little bit to zoom out and just see where we came from and the price action we made up until this moment. Okay, and from that point of view, you want to zoom in after that and just understand if the price really reached a major support level where it can actually turn to the upside. So one of the things that will help you understand that, other than the movement of the candles and the price, is looking at the MACD, and the MACD is basically built from EMAs, 3 EMAs, and you can see the deviation between the price of the MACD and the price of the chart. So the chart is dropping down and creating new lower lows, but the MACD creating new higher lows. You can see it pretty clearly here. Now, in most cases at least, this will indicate that the price should push to the upside. However, and this is something that we will understand as long as we trading for a while and trading with the MACD, let's say for a while, you can see that it's already extended, pretty much extended the price of the MACD, extended compared to the price of the S&P. So it should have done something. Let's say if I want to see a real MACD deviation, the right one, you wouldn't see a major lower high. So it should have been something around this area. And as you can see, the movement was pretty much strong in the MACD, while in the price of the S&P it wasn't that stronger as we can see on the MACD. So basically those kind of nuances will help you understand when the deviation is the right one. I actually took that trade on the Nasdaq. I will I will show you in a second the Nasdaq trade that I took, and I was there up until yesterday, and because I saw that the deviation was too extended, and we're still in a negative trend, then I got out of this trade. From my opinion, at least when I'm looking right now, obviously it could be a nice, maybe like a inverted head and shoulder or whatever they are trying to pull here, but at the end we're still very negative, so I wouldn't jump on long trades just like that. Obviously we are covering right now a 4A chart, so intraday, let's say day trading on a 1 minute, you can easily be long or take short, but when I'm looking at just a tiny bigger picture, I can easily see the price dropping just a little bit more before it will reverse. That's at least from my opinion. In the opposite direction, if we will continue higher, then the 3830 should be the resistance level that you're aiming for. So if you're taking a trade from this area and you do believe or analyze the chart and you see the opposite from me and you think the price will continue higher, this should be a nice resistance level to take partials, to take some profits off and put them in your pocket. At the end, if I'm watching for the downside, what I need to do is go back and just find the next major support level. In this case, I will go to the daily chart just so I can see more chart. And I mean, this is a good area, as you can see on my chart right now. The last low that we had is pretty much on a good support level, right? All of this area. So this is pretty much a strong support level, but I wouldn't be surprised if we will drop one more time at least and then pop up to the upside. So just taking some liquidities from the low and maybe reaching the next support level around this 3530 area, around that level, or maybe just maybe to the 3400s. So this could be also a nice level to test. This is what I'm looking for when I'm watching the bigger picture. Obviously, as I'm continue to trade and I'm looking for it, 90% of the time I'm doing day trading. So if I'm looking for day trading, that's okay to look at the bigger picture, but at the end I want to go deeper. Looking at the Nasdaq, that's the trade that I took right here, and again I got out right here yesterday before the nice pop to the upside. And just because, again, I understand that the price could continue to the upside, this is why I took that trade, but it was pretty, as you can see, pretty weak movement. So it wasn't that strong, not something that I expected to see. The deviation was too extended, and as you can see below, the white line here is actually a major support level. So I definitely expect it to drop. I don't know if right now, but to drop to that level, take some liquidities, and only then push to the upside. Let me take the chart just a little bit backward, and yeah, so you can see that the major support level is a little bit lower than what we are at the moment. So maybe, just maybe, we can see another push to the downside, taking liquidity and then pushing to the upside. That's what I'm aiming for, at least when we're talking about the bigger picture. Now dropping down to some intraday chart, you can go to the 15 minutes, just mark your support resistance levels from that point. If you watched one of the webinars that I made, I talked about the 420. I will write it down in the chat. EMA. That's something that I've been working with for a while. The 420 EMA is basically EMA first. It's the exponential moving average, and what it does usually. Most traders use like 20 and 50 and 200, and I've been using them myself. But if you go to the chart and put on a 420 EMA, you will look at some crazy support and resistance levels along the way. For example, you can see it right here in this area. Look how beautiful it held when we tested it again, and then we had a nice drop. The green one is the 200, yeah, but the 420 was it worked perfectly a lot of the times. Obviously you need to find the right time that is working, so the right period of time that it will work better. But look at this on a 4-hour chart, how many times it tested the 420, even here. So you can understand that if you saw for the last 2 or 3 months you saw it held in as resistance or support, you can definitely expect it to react as we will touch it again. Now in this case we are pretty far away from it, and lastly, like those times, it barely held as support and resistance, just for a tiny bit of a period of time. But at the end, when we will get back to it one day, it should act as resistance, so you can definitely watch it. This is a great tool that I recommend to put on the chart. Again, those kind of the MACD or the EMA, stuff like that, are great tools, but you gotta first understand the price action before you just using those extra indicators. Okay. All right. So let's get a little bit zoom in. Let's zoom in on those assets and try to find the setups, the right setups that you can work with also, let's say in the next hour or so. So one of the things when you're using, I guess, let me know who's been trading for indices, let's say, for a while now, or are you mostly trading Forex? Let me know in the chat box, so I will know what exactly are you trading. What is it that you usually trade? So while you're answering, one of the things about the indices that you can actually use volume, and the volume will help you to determine a lot of the times the reversal places. So where the price is dropping down majorly and then the volume increasing, you will see the reverse, as you can see it right here. So okay, yeah, Enrique, yeah, definitely you can use the 420 on Forex as well. A market is a market, so all indicators will work perfectly everywhere. You just need to have those fine-tuning, because just a different market, but it's same concept. Okay, John. All right, so for indices, as I mentioned, you have volume. So volume is basically the number of contracts that switched ends between buyers and sellers. Okay, how many of those contracts switched ends between the buyers and the sellers? And most of the time, let's say the basic of volume is saying if price going up, then you want to see an increase of the volume, and when price correcting or pulling back, you want to see a low volume, and that's fine. But when we're talking about reversals, when we're looking for reversing the in the trend, you actually want to see something else. So when the price is dropping down majorly, then you want to see the increase of the volume. Can you guys tell me why? Can you think of the reasons why you want to see an increase of the volume while price is dropping down? I mean, after it already been dropped down for a while. We started the movement from here, and then only here, before it reversed, the volume came strong, right? Those bars. Can you guys think of a reason why at the end of the trend you will see a high volume coming in? Now, obviously, you can use also intraday levels in order to mark your resistance and support levels, just for understanding where the trend should end. But if you will use a major one, if you want to take at least a longer position, even if it's intraday, even if it's day trading, but a bit stronger movement, then you can look for the, let's say, taking the chart of the 15-minute chart and place your orders, place your resistance and support level, or even from the 1H. Okay, yeah, Bob, definitely. Okay, wonderful. Perfect, guys. So capitulation is the right word for it. Bob, you nailed it. Basically, what is happening right here? After a major move to the downside, we had a major move to the downside. A lot of traders are looking to short. They already see that the price, let's say, is 2% down, and they're looking to short the Nasdaq, for example. So, or maybe guys that took long here already been a negative P&L, with a negative P&L for a while, and they're saying, okay, that's it, I cannot wait to get out of this trade. And as soon as they get out of their trade, or they getting into a short position, that means that in that moment, someone else from the other side is buying their positions, right? So they selling while what we call the smart money is buying their shares, and all they gotta do is the smart money, when they want to buy a large amount of, in this case, contracts, all they gotta do is to create an illusion that the price will continue and drop down even more. So they create like a major support level, major in a 1 minute chart, yeah. But they create support level, breaking through with high volume. Most traders are getting in, thinking that the price will continue much lower than that, or investors that see that the price is again dropping down, and they say we're already in a bear market and all of that, so let's get rid of more shares or whatever, or contracts. And at the end, while they're selling, smart money can buy their share and basically turn the price to the upside. So this is something that occurs every time in the markets, and especially because it's indices and you have a volume, you can see it pretty clearly. I made a couple of trades today on the DAX. We will see it in a second. That was a reversal. Most of them was a reversal, what I called SMM, smart money manipulation. I will make a video on it, like a workshop, and you can watch it as well if you like, just to understand really the whole setup, the whole system, the strategy of the smart money manipulation, just understanding when they're doing it and how exactly they've been doing it for years and years ago. So price is shooting up, the same will go to the downside. So when price is moving to the upside, reaching most of the time reaching a major support resistance level. So in this case we are at the area at least of the resistance level. I expect it to go maybe even further more to this area, because this is a major resistance level, and at the end what we should see is maybe a drop down right now to this area, going all the way up to here, and then dropping down again. And what we need to see is high volume coming right here at the end of basically the end of the trend, where we will see that high volume is coming in. Most traders will think that the price should continue higher. They will basically buy, while the smart money will drop their shares or their contracts and sell to them, right? All right. So this is what you can expect, and if we already talked about the MACD deviation, then divergence, then you will probably see it right here as well. So the price in the MACD will drop and then will go up, but not higher than the last high that we had. So in the price of the Nasdaq you will see a higher highs, but in the MACD you will see higher lows. So lower highs. So lower highs in the MACD, higher highs in the price itself, if it will be in this area. Obviously you can go back and find another resistance level and try to see if the price will turn from that area as well, according to what we just mentioned, the high volume that coming in, the extended price, the deviation in the MACD, and so on. So let's jump to the platform, the MetaTrader platform, and let's look at the trade I made, the trades. It was multiple trades I made on the DAX. Okay, so again, before I'm looking to trade, I just want to understand first where we are coming from, right? So the price dropped down, and again it was a major drop to the downside from 13,420 all the way to 13,000. So we're talking about 400 points to the downside. It's a lot. Right now I'm on a 15-minute chart. Then let's even go to the daily chart for a second. Obviously the DAX is dropping just pretty much the same as the S&P and the Nasdaq. So price dropped, bounced up, and then reach a resistance level, dropped down again. So we're pretty much negative on the daily chart, but since it's already dropped, and look at the wave here, it was pretty strong, right? It wasn't just like choppy drop. It was a very strong, very momentum oriented drop. So most of the time you will see a bounce after a major drop, exactly as we had here, right? So what I'm looking for on a 1 minute chart, this is what I'm trading. That was the US market just opened. So what I'm looking for on a 1 minute chart, because this is what I'm usually trading, what I'm looking for is basically understanding first where the price is coming from. So as I said, it came from a major drop, and from that point all I need to do is just look at the area. It's the 1300, so we're still at the range of a major support level. There was a MACD deviation here, and also as you can see, we got the same thing, a major drop at the end of the trend, volume coming in. Let me add it here. Yeah, so volume coming in as we drop, not at the beginning of the trend. So it was, like I mentioned, we are already dropping majorly. A lot of volume coming in when we started to drop. So a lot of people thought that this price right here, this support level, basically was the last straw, and from this point we will drop even more than that. But that was just the manipulation, just creating an illusion that the price will continue down. So a lot of people are selling when the price breaking a support level, and when they're doing so, they basically letting the smart money get in a lot of shares or a lot of contracts in that matter, for a nice price, right? For a great price. So a lot of people selling, the other side is buying, and from that point you just need to find places to get in. You don't need, and this is if you see my chart here, you don't really, my trades here, you don't really need to find a very specific place to get in. You can easily get in and add more to your position and manage the trade. We actually, Sol and I actually talked about it on our podcast. In case you missed that, you can watch it. You can watch it on YouTube. You can also listen to it on Spotify and the other platforms. It's called The Trader Over the Shoulder. Let me write it down for you in the chat. And if you are a Fiverr funded trader and you have the Discord platform as well, the Discord channel, then you can go to that. We are posting every time that we are uploading a podcast, we are posting it there as well. So check it out. Sol and I talked about it. We had a nice episode on it, on managing the trade. As you can see, one of the was nice trades here, but two of them was in a loss, right? This one and this one. So that was, I entered the trade, I took some profit off, but then it got and went back and basically put my P&L to a negative point. Now, a lot of people are just placing their stop loss and waiting for it to get it, right? But you can actually take some of your losses out and then enter again and add to your position again. So this is probably the best thing about trading that we as retail traders have, is that we can actually manage the trade. We can actually manage it, play with it along as it continue to our favor or against us. We don't have to be like robots that just place in stop loss and take profit. We can actually work that trade, and this is something that is super important. Obviously you need to maybe work on it and develop your skills until you really sharpen it and can handle it right. But at the end, this is definitely something you want to keep your focus on, not just buying and holding for the whole movement, but actually manage it and be in front of the computer and feel the trade, understand where it's going, taking some losses off, but adding more to get the price lower, to basically average the price a little bit, and then when it goes to your favor, you can actually make the profit. So as I mentioned, you don't really need to enter on a specific point. You can actually build your trade. Any professional trader doing exactly that, accumulating a position and not just buying and then selling. You can start by buying small, just what we call the filler. So let's say you have 100% risk, so instead of taking the full 100%, take a third, right? If you risk in, let's say, $200 or $100, and this is your risk for the trade, you can easily go in with 10 or 20, even $30 risk at the beginning, and then when it dropped down just a little bit more or go to your favor, then you add another 10%, another 20%. It dropped down or go to your favor, then you add another one until you reach the 100% risk for that trade. So don't try to find the exact moment to get in the trade, because most of the time you won't get it right because it's kind of hard. But here I entered, I don't really remember, you can see the hours and all of that to find out exactly where, but I entered here some and took some out, and then entered here and add more here and here, and basically build up the position until it broke through, and I took my partials out. So just make sure when you are trading not to go all in, but build it. It will be much wiser. At least in my opinion. Trading is super individual, so maybe for you it will work differently. There isn't really a right or wrong answer. It's just what you find that works best for you. So if you guys have any questions, feel free to drop them in the chat. If not, let's see if we have any trade or a possible trade here, and if not, we will wrap it up. So again, the Nasdaq, DAX and S&P and the Nasdaq looking pretty much the same. We reached support level, bounced off of it, pulled back, now pushing higher. What we're looking for is the next resistance level, taking it from the 15 or the 1H. So you can see this one is the right one, the one that I'm standing on right now, or the one above it. So let me mark those two. This is the first one, and the other one is just above it, around this area. Yeah, around this area. So those are two resistance levels that we can work on if we want to take reversals. So price is pushing higher, reaching the resistance level, and when it will reach that, as you can see, getting very extended. So if it will reach that, and the volume, as we talked about, will increase, and the negative deviation in the MACD, then you can easily take a short position. And again, you don't need to wait for the price to shoot up in order to get in. You can see that the price is getting closer and get a third in, and so on. And as you can see, and more confirmation coming along, then you can actually add more to your position. Okay, guys. So if you have any questions, feel free. And if not, we'll wrap it up. Okay, let's see. So we reached that support, the resistance level. We actually broke through it. Didn't create the negative deviation in this matter. Let me see if we have anything else. If price will break through that area, we should continue to the upside, at least until the next resistance level. That should be around this area. Right about where I'm standing. You can see it clearly on the left side. Those resistance level right here, here, and here. So in case the price will break through the 11,500, then we should continue to the 11,550 or 60, and then from that point maybe try to look for the downside. Again, day trading we're talking about. So this drop in the price right now could be a good sign for us, because if the price is dropping, then the MACD is dropping, and when the price, if obviously I don't really know if the price will go up, I'm not trying to predict that, but if the price afterwards will continue to the upside, then the MACD will continue as well, but we want to see it below the previous high. So that's what we are aiming for. And again, high volume coming in at the end of the resistance, right around the resistance level. This could be a nice place to look for the short side. Maybe build up a position there. Yes, Sergio, definitely. You can apply it to any market, gold. Yeah, I've been traded gold also for, I don't know, like 6 years. Gold and oil, you can definitely use those parameters to work for commodities as well. All right, guys, it was a pleasure like always. Hopefully you enjoyed it as well. Have a great time trading, and we'll be in touch next time. Take care for now.